Hey, good afternoon. This is Brad Walczak with Premier Marketing. Hey, I want to start by thanking all of you for taking the time out of your busy schedule and attend this webinar. I know it's a hectic time with AEP going on, and getting all those meetings in can be difficult. To start Long-Term Care Awareness Month, we want to give you as much product information and marketing tools as we can over the next 4 weeks to help you out. So today we have representatives with GTL here to go over Home Care Secure, which is one of the many great products that they have to offer. As many of you know, it can be hard to place them, and this fills in a gap. More and more people want to stay at home, and this is a great tool for that. So with that, I have Nick, Liz, and Tierney here to go over the product with us today. We will follow up with a Q&A session. But for any reason, if you have any other questions that come up afterwards or you can't attend, Katie and I will be happy to help you out. So with that, I'm going to turn it over to Liz. Here you go, Liz.
Wonderful. Thanks so much, Brad. Really appreciate the warm introductions. And as Brad had highlighted, my name is Liz Christopher. I'm joined today by my colleagues Nick Polish and Tierney Beauregard. And we are all thrilled to be with you to introduce an innovative solution which combines insurance with navigation and advocacy resources. Now, we like to tease a lot that you don't always associate insurance with innovation, but after today's presentation, we hope you come away with just that, a different way to think about insurance and a robust offering to enable your clients to realize their dream of aging at home as safely, as independently, and as long as possible. Before we get into product details, I did just want to give a little bit of background and context on why we designed this solution offering. So all of our employees have either been a caregiver or have had to search for caregiver services for a family member or a loved one, as I'm sure many of you and many of your clients have had to do as well. We know now that the majority of people want to age at home more so than ever, yet the emotional and the financial burdens can be overwhelming, both to the individual as well as to their families. In addition, we're all very aware that the healthcare system is disjointed and fragmented, but especially within the short-term and long-term care spaces. And if you couple this with the misunderstandings and misperceptions of what Medicare will cover, it's no wonder that there's a problem. In fact, the average person will consume roughly $50,000 in unreimbursed custodial healthcare expenditures in their lifetime, most of which is not budgeted or planned for. It's a massive blind spot for so many, and one which results not only in having to make difficult decisions for where a loved one ages, but also to the quality, to the access, and to the type of care that they may receive. And on a very somber note, these expenditures are the primary reason that individuals file for bankruptcy later in life. And so that's what brings us to Home Care Secure, our integrated solution, which combines an indemnity insurance product with navigational and advocacy supports to provide your clients with the tools, the resources, and the financial security to age at home. So at a very high level, the indemnity insurance product has available lifetime maximums ranging from $20,000 to $60,000 in $10,000 increments. The benefit's designed to pay over 50 weeks, thus leading to weekly payments ranging from about $400 up to $1,200. And because of the indemnity nature of the product, this money's paid directly to your client. Now, if we move over to the right-hand side, you will see the Aging at Home Association. And this provides a robust set of tools, resources, and discounts that we've divided into 3 main areas. So discounts and special values for frequently used goods and services, such as telemedicine and durable medical equipment. We also offer care coordination services ranging from free online self-service tools to help you make a plan to age in place, up to discounted personalized services provided by a dedicated advocate who's trained in elder care. And then lastly, we also offer an annual well-being assessment that we developed in partnership with Fidelity Investments, which takes a holistic view of an individual in the areas of life, health, and money. So these elements all work together to educate your clients on the emotional, the social, the financial, and the operational components to be able to age at home. And with that, I'll turn it over to Nick to provide additional details on the product.
Thank you, Liz, and hello, everyone. So I'm going to spend a couple of minutes on this slide addressing three fundamental questions. Who's eligible for coverage? What are some key product features, and how do individuals qualify for the weekly cash payments? So let's work our way left to right. First, from an eligibility requirement perspective, there are three. First, the individual must be entry age 35 through 84. Secondly, be a legal resident of one of the 22 states where home care secure is available. And we'll take a look at the states in a moment. And then finally, be able to pass the 5-question simplified underwriting process. And passing, of course, is the ability to answer no to each of the health eligibility questions. And based on our experiences, over 90% of your clients will be able to pass. Turning now to the key product features in the middle column, similar to other products in this category, Home Care Secure utilizes entry age pricing and is guaranteed renewable. So entry age pricing means that the rate is based on your client's age at policy issue, and it remains fixed for the life of the policy. And then guaranteed renewable means it can only be terminated for non-payment of premium. As Liz mentioned previously, plan maximums range from $20,000 to $60,000 in $10,000 increments. And recognizing that folks often buy these policies years, if not decades, before anticipate needing the cash payments, there needs to be some vehicles with which to allow the policy to keep pace with wage inflation. And there are two mutually exclusive options. One is the inflation protection rider. The second is the $10,000 buy-up. So let me describe each, if I may. First, the inflation protection rider. So this is a decision that your client would make at policy issue. The interest rate is 3% simple interest, and it begins accruing in the 7th policy year. And there's no limit to the increase in the lifetime maximum benefit while the policy is in force. So by way of example, if your client purchased a $50,000 policy with the inflation protection rider, after 30 years, the maximum will have grown to $86,000. Now, the alternative to that is a $10,000 buy-up. And the buy-up is available every 3 years or more. However, it's subject to a lifetime maximum benefit of $60,000. So to continue with the example I used with the inflation protection rider, if your client purchased a $50,000 lifetime maximum benefit, they would only be able to buy up one time because they'd be at the $60,000 maximum. And then, of course, if your client purchased a $60,000 lifetime maximum benefit, the buy-up wouldn't be available to them at all. So their only option to have the policy keep pace with wage inflation is the inflation protection option. Now, the lifetime maximum benefit grades over a 5-year period. So it starts with 10% in year 1, 20% in year 2, and then beginning in the 6th and subsequent years, 100% of the lifetime maximum benefit is available to your client. And you might ask, what was the rationale behind offering this feature? Well, it had a couple of really 3 advantages. First, it allowed for simplified underwriting with a very low threshold. Secondly, more competitive premium rates. And then third, as I alluded to earlier, while none of us can predict our healthcare future, your clients are generally purchasing these policies 5, 15 or more years before they anticipate needing the cash payments. Thus, the grading schedule is effectively not applicable. And then the final key product feature I'd like to share is the multi-episode of care. And the headline here is that Home Care Secure can be used episodically over a period of time for acute healthcare conditions. So it doesn't have to be used all at once. And one episode of care ends when your client recovers and does not need home healthcare services for a minimum of just 30 days. And that kind of leads to the next logical question, the last column. Well, okay, how does my client qualify for the weekly cash payments? So there's 3 fundamental requirements. First, a licensed healthcare provider, which can be a physician, of course, but it could also be a registered nurse or licensed social worker. So one of those healthcare professionals must certify that your client suffers from either a physical or cognitive impairment, very similar to long-term care. The trigger for a physical impairment is the inability to perform 2 or more of the activities of daily living. So bathing, dressing, eating, things like that. Cognitive impairment could be a dementia diagnosis. It could be stroke or traumatic brain injury. So some examples there. So that's criteria 1. Second criteria, because of their impairment, the individual needs home health care services at least 3 times a week, and each visit must be at least 1 hour in duration. And then finally, all of this is documented in a plan of care. Now, as Liz mentioned earlier, because of the indemnity nature of the benefit, the weekly cash payments are made directly to your clients, and they can use the money as they wish without any restrictions whatsoever. So let's take a look at the state availability map. So the 22 states in green are where Home Care Secure is available today. And the states in gray with their abbreviations within their borders are states that are targeted for expansion in the first half of 2023. So let's take a look at the application, or really the simplified underwriting questions. So these are the 5 questions that I alluded to, and they're knockout questions. So if your client must answer yes to any one of them, they're ineligible for coverage. But as you're kind of skimming through the questions, I'll just leave you with some thoughts. The process is very simple. It yields real-time determinations at the point of application, and is easily attainable. As I said earlier, 90% or more of your clients will be able to qualify. And note that the health questions are pretty narrowly scoped, and the look-back period is only 12 months. So the bar is set relatively low. So with that, I'm going to turn it back over to Liz to talk a little bit about the features, benefits, and discounts of the Aging at Home Association.
Great, thanks, Nick. So as we highlighted before, we were very purposeful in the design of both the product and the association. Since we've been in this position ourselves, either being a caregiver or having to search for caregiver services, we know how overwhelming the process can be. And in addition, with our vast experience in the insurance industry, we've seen far too often that people don't learn about their insurance, right? They don't understand their benefits and their levels of coverage, and they don't really look into it until they're sick and at their most vulnerable. Thus, they're not usually equipped to make the best decisions. So we wanted to bring together the tools, the resources, and the navigational supports to help individuals and their caregivers in advance of their time of need, so they have increased peace of mind. And as part of this peace of mind, we wanted to ensure that our association provides valuable benefits and discounts that align with our mission to enable individuals to age at home. And the beauty about these benefits and discounts is that they're available not only to the policyholder, but to their immediate family members as well. So just to give you a little flavor for the types of benefits and discounts that we're talking about, we offer free unlimited telehealth visits through our partnership with Wellvia. We also offer access to discounted care coordination services. So as I had highlighted before, this ranges from free online self-service tools to help you make a plan to age at home, up to discounted personalized services where you have your own dedicated advocate who can help with things such as vetting care coordination, arranging transportation, and will even help with reconciling medical bills. And then lastly, we also offer discounts for frequently used goods and services such as durable medical equipment, and then if you need assistance with, say, will planning services. All of these come together to provide immediate value to your clients and their immediate family members, totaling several $100s per year on average. And it's really the idea that we wanted this to be an all-encompassing type of integrated offering. So you have the insurance, as well as having these very valuable association benefits and discounts. So you may be thinking to yourself, well, it sounds great, but kind of how does it all work together? So we want to introduce you to Retiring Ray. And this is a persona that we created to help these elements and make them real for you. And so Ray purchased the $50,000 lifetime maximum benefit with the inflation rider when he was 65 at a monthly premium of $109.57. Now, I do want to pause there for a moment, and I wanted to highlight that we were very particular about selecting this level of coverage for the example. Because if you recall earlier, I had mentioned that the average unreimbursed out-of-pocket custodial expenses are roughly $50,000. And this is at a cost that 2/3 of us will encounter in our lifetime. At the age of 80, unfortunately, Ray requires in-home custodial care and he needs to go on claim. So by this point, you can see Ray has made monthly premium payments in the amount of $19,700. Yet if you look here, Ray has an available maximum benefit of $63,500, which reflects the original $50,000 policy plus the inflation rider, translating into payments of $1,270 a week for 50 weeks. And since Ray has been a client for 15 years, he's been taking his annual well-being assessment. He's been leveraging the available online tools and resources. Ray and his family have had discussions, and they know what to expect from a benefit perspective. They also created an aging at home plan. So now they have a plan to enable Ray to age in place. And now they're just executing on that plan with increased peace of mind. And with that, I'll turn it over to Nick to close us out.
Great. So this is the who, what, where slide. So who is buying Home Care Secure? What are they buying and where are they buying it? So first, who? So to date, buyers are skewing slightly female, 54 to 46%. You know, the age range of policyholders, remember the entry age eligibility is 35 through 84. Right now we're sitting on 44 to 79, you know, our youngest policyholder and our oldest. And the average and the mean ages are pretty similar to one another, and they're 57 and 60 respectively. In terms of what they're buying, over 75% at this point of sales are either at the $50,000 or $60,000 level, the vast majority at the $60,000 level. And 65 to 70% are purchasing the inflation protection option at policy issue, which makes total sense and aligns with the fact that most policies sold are at the $50,000 or $60,000 level, where the $10,000 buy-up is of limited value, or in the case of the $60,000 max, of no value. And in terms of where they're buying it, you know, we have sales in all 22 states where the product is available, and 50% of sales, though, have been in 6 states, Texas, Illinois, Georgia, North Carolina, Arizona, and Ohio, which kind of makes sense because they're the most populous states, or more populous states, you know, favorable target demographics, as well as, you know, more practicing insurance agents. So let's take a look at target buyer characteristics. You know, your clients will purchase Home Care Secure for a variety of reasons, including life stage, financial considerations, and personal expectations and experiences. And it's important to keep in mind that these are not silos. It's likely that you have individuals that possess characteristics in multiple categories. But let's just kind of give you a flavor of these. You know, first from a life stage perspective on the far left. You think about individuals in their 40s. They've likely experienced a loved one, you know, for example, it could be a grandparent or parent, go through a physical or cognitive decline. And that's a very powerful motivator. You know, as people age, you know, once they're in their 50s through mid 60s, they're beginning to think about and plan for retirement and what that looks like for them. And then finally, individuals ages 65 and older are considering care options as they age. You know, from a financial considerations perspective, we know from published statistics that, and this is kind of staggering, 87 million households in the United States have investable assets of less than $100,000. And Liz shared with us earlier that the average person will consume $50,000 of unreimbursed custodial home health care expenses during their lifetime. So for the vast majority of Americans, retirement savings are insufficient to cover custodial home health care needs. It's effectively an unfunded liability. And educating them on a potential gap in their financial plan and providing them with a cost-effective solution certainly is the right thing to do for your clients. And then finally, from a lifestyle expectations perspective, we all have a strong desire to age independently, both physically and financially at home. And it's always been a strong motivator, but even more so in the pandemic environment and what happened to individuals that were in congregate living situations. So let me share with you 3 quick use cases. Medicare, ACA, and employer-sponsored benefits. Medicare is kind of a natural one, and there's a couple of scenarios here. Scenario 1 is where individuals are aging into Medicare, and then scenario 2 is where they're already on Medicare. So the first scenario, aging into Medicare, and this is a statistic that probably all of you already know, but in the event you haven't heard it before, literally in the United States, every day, 10,000 individuals age into Medicare. So it's a pretty significant number, and it's a growing, addressable market. And chances are, for every one of those individuals, their monthly financial obligation for Medicare healthcare coverage will be lower, and potentially substantially lower, especially if they purchase a Medicare Advantage plan, than what it costs them to maintain their employer-sponsored healthcare. So here's a great opportunity to educate your clients on their potential financial exposure, and redirect some of the premium savings going from transitioning from employer-sponsored healthcare to Medicare to fill the gap with Home Care Secure. And then for those of you that have clients who are currently on Medicare, Home Care Secure is a great reason to check in with them after the close of the open enrollment period. ACA, the Affordable Care Act. So here we're leveraging the power of the American Recovery Act. And the American Recovery Act increased, and this occurred, by the way, in the first half of 2020. It increased the plan design and premium subsidies for individuals who earn 400% or less of the federal poverty level. And then additionally, it introduced for the first time subsidies for select individuals who earn in excess of 400% of the federal poverty level. And those enhanced subsidies were basically renewed for 2023 and I believe for 2024. And it's hard to imagine that they've now become the new normal. And it's hard to imagine that they'll ever be rolled back. So this will be a useful sales tool for the next couple of years, at least, if not longer than that. And essentially the rationale is the same as those aging into Medicare. You're educating your clients on their potential financial exposure, this unfunded liability, and redirecting some of the savings. And these savings are effectively the increased subsidies to fill the gap with Home Care Secure. And then finally, for those of you that are in the group market, and if you've been following trends as it relates to voluntary benefits, the next big thing in voluntary benefits is caregiver benefits. Just some statistics for you. 45% of employees have caregiving responsibilities at home, so it's a big issue. The annual cost to employers for full-time employees with caregiving responsibilities is in excess of $17 billion. And it works out to almost $2,500 per full-time employee. So employers obviously have a vested interest in meeting the caregiving needs of their employees. And so Home Care Secure could be a wonderful voluntary worksite benefit that has advantages for everyone. So from the employer's perspective, not only are you offering a valuable caregiver benefit, but it doesn't require any administrative lifts on your part. Because Home Care Secure is not an ERISA plan, there's no annual Form 5500s that have to be filed with the IRS, no summary annual reports that need to be distributed to participants, there's no discrimination testing, no minimum participation requirements, and because premiums are paid with bank draft, either checking or credit checking or savings account, there are no payroll deductions to worry about, no one to notify when an employee terminates. So easy peasy from an employer perspective. From an employee perspective, it's a fully portable benefit that fills a significant gap in their financial plan. And then from all of your perspectives, each employee potentially represents multiple sales opportunities when you consider it's not just the employee, but could also be their spouse and potentially parents and in-laws as well. So let's talk a little bit about the opportunity and then resources and support. So why introduce your clients to Home Care Secure? Well, there's opportunities for your clients and for each of you. Each of you are trusted business advisors to your clients. So here's an opportunity to reinforce that position by educating them on a potential gap in their financial plan and introducing them to a solution to protect their future and provide them with peace of mind. We realize that your time is your most precious resource. Thus, we designed Home Care Secure to be easy for your clients to understand, affordable, experience high acceptance rates, and save time with an efficient enrollment process that literally takes 10 to 15 minutes to complete. In terms of resources and support, we're all focused on your success. And we've developed a number of consumer-approved marketing materials, such as an explainer video, product brochure, customizable postcard and infographic, and other assets to assist your marketing efforts. As well, for those of you that are familiar with GTL's technology platform, we're utilizing eApp, which is their online quoting and enrollment tool, and all of the marketing information and educational materials are housed on GT Link, which is their agent portal. So what's next? So if you're contracted with Premier and appointed with GTL, congratulations, you are ready to start selling Home Care Secure. On the other hand, if you're not appointed with GTL or you're not contracted with Premier, please contact Brad or Katie, and they will quickly get you contracted and in the market. So with that, Liz, Tierney, and I, we thank you for your participation, and I'll turn it over to Brad to see if there are any questions were submitted that we can address on your behalf.
Okay, thanks, Nick. We didn't get any questions during that time. So I guess with that, I just want to thank you guys for covering the product. I always seem to learn something new with this webinar. So it's a great time spent. And I just want to thank all the agents that were able to join us. As before, I said, if you have any questions, feel free to contact Katie or myself, either with product questions or helping with an application. I guess that's it. Hey, thanks, guys.
Thank you, everyone.
Thank you. Have a good day.